of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the stories behind the major developments in the banking sector. In today's show, our cover story looks at wage negotiations in public sector bank. For Bankers View this week, we have Rakesh Jain, CEO of Reliance General Insurance. In Banking for You, we will tell you all about the currency chest system. Our consulting editor, Tamal Bandhopadhyay, joins us to discuss the great rescue of a housing project backed by lenders and the Supreme Court. At the show's end, we will share last week's poll result and the question for this week's poll. So let's begin. Wage revision in public sector banks is usually a time-consuming process. Bank management and unions get into tough negotiations. But banking is no longer the same industry, with private sector lending and technology coming in. Banking jobs in state-run banks do not hold the same attraction as they did in the past. In this changed industry and modern times, should public sectors continue to decide wages in the old way? Raghu Mohan shines some light on this in our cover story.
There's nothing more unequal than the equal treatment of unequal people, said Thomas Jefferson. Talks are on for hammering out the 12th bipartite settlement between the Indian Banks Association and bank unions. But more than half a century after the industry-wide wage pacts for state-run banks came into effect on April 1, 1966, should we have a fresh approach? The report of PG&I Committee to Review Governance of Boards of Banks in India, which came out in 2014, referred to the variance in the pay of corner room occupants in state-run and private banks. The committee in its report noted that it is unsustainable for such differentials in salary to continue without any adverse impact on the recruitment and retention of talented managers in state-run banks. While the reference was to Chief Executive Officer pay between the two classes of banks, the same can be extrapolated across all levels. And here is the irony. According to Reserve Bank of India's report on trend and progress of banking in India for FY22, despite the low pay at state-run banks, their cost-to-income ratio, which is the ratio of operating expenses to operating income, was the highest owing to high wage expenditures. Over the past decade, banking has changed. Private banks' share of incremental credit and deposits is rising, and technology is reshaping the way banks intermediate. While state-run banks may have been much sought-after career destinations 3 decades ago, this no longer holds. There was a huge staff intake between 1969 and 1984 to create an extensive branch network, and later up to 2000 there was little by way of fresh recruits, as the emphasis was on officer-level posts being filled up by promotions from the clerical cadre. In financial year 2002, a voluntary retirement scheme was offered to those with 15 years of service. It saw 2 lakh state-run bankers bid adieu. This opened the promotion window and soon recruitment resumed, even as it led to two dominant demographics, the 50 plus and the under 30 employees.
The present system of collective bargaining and bipartite settlement started in 1966, where uniform salary has been agreed upon by the banks for all the banks together. Prior to that, from 1948 to 1966 also, when he demanded wage revision, the matters were referred to a tribunal, and then the tribunal also gave an award whereby all the banks, 195 banks were covered by one at that time. So we have not found from 1948 to 66, 66 to 2023. It has been going on for 65 years. There is no problem at all. The logic for the demand for separate bank-wise wage revision is they feel that there is separate different paying capacity of the banks. So the salary should be differently decided upon. But we don't believe so, because all the we know banking, we know the interest rate on deposit is the same, the lending rates are by and large the same, the overheads are by and large the same. So it is only some here and there fluctuating profit margin depending on the business profile of the bank that it changes. Otherwise, in terms of the percentage to the total assets or total capital, is not much of variance.
The reality is that state run banks' talent is being wooed by private and foreign banks, NBFCs, fintechs, and even e commerce firms and telcos, especially those with marketing and technology skill sets. Again, no sizing study has been done after the report by the A.K. Khandelwal Committee on HR Issues of State run banks, which came out in 2010. There is also material change on the ground. The government decided to merge four sets of public sector banks effective April 1, 2020. It marked the biggest such move anywhere in the world, as it rearranged 25% of systemic banking assets in a single shot. Having merged state run banks to create larger entities with improved financials, will these entities now opt to break out of industry wide wage pacts? While there's still a large talent pool in state run banks, the reality is that it may not walk in as in the past. Lateral recruitment may have to be increased. The late K.C. Chakraborty, a former deputy governor of the Reserve Bank of India, had said, "You need to manage people, and for this, you need to discriminate between them. I mean, positive discrimination." That time of positive discrimination in the banking sector may well be upon us.
So there is a lot of demand now for the talent in the state-run banks. Private and foreign banks, NBFCs, fintechs, and even e-commerce firms and telcos are wooing them. Industry-wide wage pacts may therefore become a thing of the past, but only time will tell. In our next segment, Rakesh Jain, CEO of Reliance General Insurance, talks about the struggles of the insurance sector in the pandemic years and the growth areas. Here's more from that conversation.
The insurance industry has undergone a lot of changes in the past 1 year. Meanwhile, the general insurance industry has grown by 16% in FY23. To talk more about the industry and the company in general, we have with us Mr. Rakesh Jain, Chief Executive Officer of Reliance General Insurance. Welcome to the Business Standard Banking Show, sir.
Thank you. Thank you for calling me today.
I would like to start off with a question that in FY23, we saw that the premiums of general insurance industry went up by 16%. But Reliance General saw an increase of just 9%. So, how would you care to explain what happened there?
So, I think if you really see the general insurance industry in the last 3 years, of course, the COVID years, had actually gone through a big, I would say, pain. And the industry almost dipped to a zero growth. In the years 21 and 22 was a modest turnaround. Having said that, I would say that Reliance General Insurance, we have always believed in consistent growth. And if you really see even the earlier last 3 years, when the industry was as good as very marginal growth rate, we had grown 15%. This year, when we entered into, there were two things which were actually in front of us. The first thing, we obviously wanted to correct a bit of a balance in our crop insurance portfolio, which is a good part of our portfolio. And we had taken a calibrated view to undergrow the crop insurance. Of course, we have grown crop insurance. If you really see for GI players, crop insurance has grown 12%. For us, it has grown 5%. So and it's a big portfolio. It's almost 30% of our portfolio. So we had taken a view to balance the portfolio well. And I think that is one big reason. The second reason is also in motor insurance. We saw that there was a significant steepening of claims coming in, especially in the own damage side of motor insurance. And the third-party rates which got increased were also quite nominal, for us to give that any comfort in the overall portfolio.
Generally, what we have seen is growth in the general insurance industry has been driven by health segment. Now, but motor, especially in FY23, it has come back. The growth has come back. So would you say that the motor segment has got its mojo back, or it's still early days to say that?
See, I would say that the motor industry has come back because of the base effect. It's not that the industry has dramatically improved. I think the two-wheeler industry continues to struggle on, still performance. Commercial vehicles has been in between. It has bounced back in certain segments. Certain segments are coming in. Private car luxury segment has done well, which obviously is a very small component of overall, car sales. And the rest of the segment has done a modest thing. So if you really see the mojo has been where new models have come in, and perhaps the SUV category between the 10 to 20 lakh bracket, that has seen a lot of, I would say, interest. And the luxury segments. Frankly, the volume growths have been quite modest. So most of the people are saying that we are back to pre-COVID time. So in some ways, the last 2-3 years, mojo is like going back to where we were. So I think it's a mixed bag, but it's good to be back to where we were before the COVID times.
As you said, there is intense competition also in the motor segment. So going forward, will health be the only driver of general insurance growth? And because what we have seen is that it has stagnated a bit since pandemic. So is it sustainable just going on health?
So I think the structural shift which has taken place will bring in long-term dividends. And why these dividends will accrue is because the need for health, is tremendous. India is the most populous country in the world. And, half the country is uncovered. And even, let's say 40-45% of the people who are covered are actually covered in government schemes.
Yes.
And not on specific schemes offered to an individual customer, a customized cover, or something which meets specific needs of an individual. So if you really see retail health, what we say, which meets individual needs, it's just about 4-5% of the total coverages. So it has tremendous scope in terms of growth and opportunity. So health will continue to be a big driver in times to come. Of course, as I said, if retail health has to grow big time, it needs to customize its offering to the end consumer. It cannot be a generic thing. Hence, how new products comes in, how coverages come in, how service levels are created, how claims are settled, what experience you deliver. All these things will make a big difference. And this is where companies have to work hard.
With the composite license thing coming in, there have been a lot of discussions, and even in the past, life insurance companies have been wanting to get into the health segment. With this composite thing coming in, do you fear that the exclusiveness of health insurance, which was limited to general insurance companies, would be taken away, and this could prove to be a problem for the general insurance sector?
See, it is very difficult to say because health is, of course, a universal subject and something which, everybody wants to do something. But one thing we must understand, the health which we are doing today, is predominantly like the way life companies are doing term life, because we sell indemnity products and it is hugely service oriented, claims oriented, and there is tremendous amount of customer handling and involvement. It is not like a long-term product, which is sold.
Yes.
And you manage, many of the risks over a very long period of time. So I think there is a big difference in the way the construct of the, two health proposition is. Like, in our case, we are handling, we are still a company which is coming up and into the top rung 3. But last year we settled over 23 lakh claims. Almost 60-70% of those claims were health claims. That is huge by any comparison with, other insurance industry, life insurance.
Thank you very much for taking our question. Thank you very much for your time.
Thank you so much, Shubhroto. It's a pleasure speaking to you.
Rakesh Jain says that 60 to 70% of the general claims settled last year were from health insurance. However, he pointed out that only 5% of the population is covered under retail health insurance today. In Banking for You today, we are tracking the journey of currency notes from the printing presses to you and me. In our next report, Raghu Mohan shares the lowdown on the currency chest system with us.
Have you ever wondered how currency moves from the printing presses to banks to reach you and me? Well, an elaborate currency chest or CC system takes care of it. Let's start at the very beginning of this chain, the currency presses. There are 4 currency presses in the country. The government owns 2. These 2 are situated in Nasik in Maharashtra and Devas in Madhya Pradesh. The RBI owns the other 2 presses in Mysuru, Karnataka and Salboni, West Bengal. The RBI manages its currency operations through 19 issue offices or IOs. These IOs receive fresh banknotes from the printing presses and then send them to the CCs. Sometimes the presses remit money to CCs directly too. Scheduled commercial banks maintain a vast network of currency chests. The RBI has IOs at Ahmedabad, Bengaluru, Belapur, Bhopal, Bhubaneswar, Chandigarh, Chennai, Guwahati, Hyderabad, Jaipur, Jammu, Kanpur, Kolkata, Lucknow, Mumbai, Nagpur, New Delhi, Patna, and Tiruvananthapuram. In addition to CCs, there are also small coin depots. According to RBI data, India has 2,878 currency chests and 2,296 small coin depots. More than half of the CCs are maintained by the State Bank of India. Nationalized banks maintain another 1,067 CCs, while private banks maintain 253 CCs. The RBI itself maintains only one CC. In 2019, the RBI revamped the CC system. The CC balance limit or CBL was to be at least 1,000 crore rupees. The CC had to be in a 1,500 square feet strong room. In hilly and inaccessible places, the strong room was to be at least 600 square feet. The CCs were to have a processing capacity of 6.6 lakh pieces of banknotes per day. For those situated in hilly and inaccessible places, the capacity of 2.1 lakh pieces of banknotes per day. Currency is deemed currency in circulation only when the currency is outside the CCs. Similarly, when banks maintain a cash reserve ratio or CRR of 4.5% of every 100 rupees in deposits, they hold it in the currency chests.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That was interesting to see how the RBI manages the currency operations. RBI is also among those involved in a unique experiment for the great banking rescue of a real estate project, delivering hope to hundreds of home buyers. I spoke with Tamal Bandhopadhyay, our consulting editor, on how this rescue has come about and its future possibilities. Hi Tamal, welcome to the Business Standard Banking Show. Today we are discussing what you've termed as the great banking rescue of a real estate project. We're talking about the Amrapali Group's project in Noida, which has got the backing of lenders, the RBI and everybody's Supreme Court, of course, who've taken upon this unique experiment. So the first thing I want to ask you is why this particular project has been chosen for this unique experiment.
I wish I had the answer. So this is a simple case where it's a rogue promoter, the real estate dealer, who branched out into different things, including making films and diverted funds. CBI arrested him, so the project was in the lurch. So the one particular bank, Bank of Baroda, moved for insolvency. And then thousands of borrowers, they moved court, seeking some kind of relief because they have put in their hard-earned money. And that's how the Supreme Court stepped in. So I can't think of any other instances where the borrowers, the home buyers actually moved court, and that's how it happened. So it's not that banks wanted to experiment with it. It happened this way. So once this borrowers moved the court, then the Supreme Court stepped in, and there it comes, the real story comes. It's a unique case. Supreme Court took the responsibility of ensuring that indeed this project should be completed and the home buyer should get their homes. So what did Supreme Court do? Supreme Court first appointed a receiver and gave the power to the receiver, who is now currently the Attorney General of India. He is the receiver. Supreme Court also passed on all the lease from the Noida authorities to the receiver and told the receiver that you do whatever you want. And it didn't stop there in the process. Reserve Bank of India also stepped in, because why would banks, typically what happens, you will find many such unfinished projects. You and me, when you're looking for a home, normally we are very circumspect about going for an under construction home, a flat, because there is no possibility. There definitely would be, most of the cases, cost overrun, time overrun, and in some cases you never get back your flat. This is one such case. Now, for completion of that, you need more money. Now, why would banks give more money? Tell me. Well, who would like to throw good money after bad money? So then the Reserve Bank of India also stepped in. What RBI said that you would not need to define this particular exposure as bad exposure or NPA, which means bank did not need to treat them as bad loan and did not have to provide for it. So it was that was a safety valve for the bank. And secondly, Reserve Bank of India also allowed this particular exposure to be a part of priority sector lending. The so-called priority sector lending, as you know, for every 100 rupee a bank lends, 40 rupee needs to go priority, which is to the weaker sections, low-cost housing. It's a very dynamic definition. It changes. Bankers did ask for a government guarantee also, but the government did not give it. But between Supreme Court and Reserve Bank of India, made sure that the bankers feel comfortable. Having said that, private banks did not participate. It's only the public sector bank led by Bank of Baroda. 1,500 crore they committed, and that's what happened. I mean, people are getting, I think 40 odd thousand units, and quite a few thousand units have already been handed over to the home buyers.
You have said that the banks will certainly get back their money. How are they going to get back their money? Can you explain us a little bit?
No, what Supreme Court did a receiver, appointed a receiver, and also a trust created, the Aspire Trust. Now, an NBCC was roped in to oversee the completion of construction. So this is the logistic thing. Now, how banks get back the money? The banks would get back the money because the home buyers, they did not pay their entire, they did not, once they get their home, so they are all, I don't know exactly, but there are part payments were done and some part was still left. So that money would come to the banks. And there's a twist in the tail. The banks have found that many, I can't say in percentage term how many, but quite substantial number of flats are actually booked Benami. In the sense, the promoter, the promoters book the flat under different names. Now there is no taker for the bank for these flats. So which means what? These flats can be independently sold and the money would be generated. And the Supreme Court have ensured that, because banks were still, one step forward, two step backward. How would I give the money? Because I don't have any collateral. The collateral was lying with the Noida authorities. So there are a series of Supreme Court judgments, and one such judgment in 2022 allowed the receiver to pass on this lease from the Noida authority to the banks, which means the banks are holding all the flats and land, everything as collateral. And as the flow of money comes from the buyers, banks will get back their money.
Do you see this opening the possibility of more such rescues?
Absolutely. I think it's a landmark case. I would like to believe that. And and this is, as I said, it's a win-win for them, win for the home buyers as well as for the banks. Banks are not losing any money. I am aware of quite a fair number of projects in different parts of India, which is just like abandoned, not been completed. Now, unlike any other projects, here you see the assets are there. There are assets. It's not that there is no assets. So, which means you need to have a fresh fund flow to make it happen.
That's a great precedent that has been set by the Supreme Court. And some of the things that have helped, I think, from the bank side is that the Supreme Court has said it need not be defined as NPA, and the priority sector lending definition, etc., that has worked. I hope that we will see more such rescues, especially from the point of view of home buyers. It's such a great news. Thank you so much, Tamal, for delving into this topic. A lot of viewer interest in it. Thank you for joining, and we will see you next week again.
Thanks, Ichika. Thank you.
Tamal says this will open doors for more such rescues, as this experiment has turned out to be a win-win for all. And now to our final segment, the Business Standard poll. Last week, we asked you, are public sector bankers overworked? 51% of our respondents felt yes, they are, while 49% said they are not overworked. The US Federal Reserve lowered the quantum of hike in their policy rates to 25 basis points in their monetary policy meeting last week. Some experts think this would leave room for the RBI to extend the pause in rate hikes. We are asking you this week, will RBI follow in the footsteps of the US Fed? Our poll is open from Thursday, which is today itself. You can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.